Methods of computing depreciation. Depreciation can be computed by using a variety of methods, which includes 1. Fixed installment method, or straight-line method, SLM. 2. Reducing balance method, RBM. 3. Machine hour rate method. 4. Sum of years digits method. 5. Depreciation fund method. 6. Insurance policy method. 7. Annuity method. 8. Provision for depreciation method. Those most commonly used methods are straight line method, SLM, and reducing balance method, RBM. The management of a business selects the most appropriate method based on various important factors such as type of asset, the nature of the use of such asset, circumstances prevailing in the business, GAAP prescription, and legal and regulatory requirement. A combination of more than one method is sometimes used, like SLM, straight line method. According to this method, a fixed proportion of the original cost of the asset is written off for each year, so that the value of the asset is reduced to its residual value at that end of its estimated economic useful life. The same amount of depreciation is charges every year throughout the life of the asset. Depreciation is charges on a uniform basis every year till the asset is written off. The amount of depreciation is calculated as follows. Amount of depreciation per annum equals cost of the asset minus scrap value divided by the useful life of the asset in years. Now, let's calculate the rate of depreciation. Rate of depreciation equals depreciation per annum divided by cost of the asset multiplied by 100. We will get the rate of depreciation in percentage. Let's understand these equations with a simple illustration. Machinery is acquired at a cost of $400,000. Its estimated useful life is 8 years. Installation expense amounted to $10,000. Its scrap will realize $10,000. Let's calculate the amount of depreciation per annum, rate of depreciation per annum. And we also show WDV, that is, written down value, at the end of each year. And let's see how will machinery appear in the balance sheet. At the end of the years 1, 2, and 3. Let's find out the solution. The amount of depreciation will be calculated as under. Depreciation per annum equals, in bracket, $400,000 plus installation expense amount is $10,000 minus scrap value, $10,000, divided by the useful life of the asset is 8 years. Answer is $50,000 per annum. The rate of depreciation is the reciprocal of the estimated useful life. This may be calculated as rate of depreciation per annum equals $50,000 multiplied by 100, divided by cost of the asset, that is $400,000. Answer comes 12.5% per annum. Let's prepare the table for present written down value over a period of life of an asset. Following table represents the WDV, written down value, over a period of life of an asset, which is 8 years. The amount in column of cost and depreciation remains as it is for 8 years. The accumulated depreciation for first year is $50,000. WDV, $360,000. Second year, $100,000, $310,000. Third year, $150,000, $260,000. Fourth year, $200,000, $210,000. Fifth year, $250,000, $160,000. Sixth year, $300,000, $110,000. Seventh year, $350,000, $60,000. Eighth year, $400,000, $10,000. Let's see how machinery will appear in the balance sheet for 3 years. Gross block remains same, $410,000 for first, second, and third year. Less accumulated depreciation. For first year, $50,000. Second year, $100,000. Third year, $150,000. Net block for first year, $360,000. Second year, $310,000. Third year, $260,000. Let's understand the merits and demerits of straight line method. Merits of SLM methods are: A. It is simple and easy to understand. B. The value of the asset can be exactly written off to scrap value. C. It is useful for assets with relatively uniform usage during its useful life. Demerits of SLM methods are: A. It does not take into account the effective utilization of the asset. The same amount of depreciation is charged irrespective of use of the asset. B. Even though the asset is used uniformly from period to period, the total charge for the use of the asset keeps on increasing every year. It is because cost of repairs rises when the asset gets older, though same amount of depreciation is charged every year. And C. Taxation authorities prefer RBM. Let's understand the second method, that is, reducing balance method, RBM. Under this method, the depreciation is charged at a fixed annual rate. On the reducing balance, cost less depreciation. The amount of depreciation charged in each year is not fixed, but goes on decreasing gradually every year. Thus, the amount of depreciation is higher in earlier periods and lower in subsequent periods when repairs and maintenance cost of the asset increases. Let's see. The formula for calculating the rate of depreciation under reducing balance method is as follows. Rate of depreciation equals 1 minus n. Under the nth root, net residual value divided by cost of acquisition. If residual value is 0, assume as 1, where N represents the life of the asset in years. Let's understand it with simple illustration. The cost of the asset is $20,000. Residual value is $2,000, and the life of the asset is 3 years. Let's compute the annual rate of depreciation. Solution. Rate of depreciation would be calculated as follows. Rate of depreciation equals 1 minus 3 under the nth root, $2,000 divided by $20,000. Answer: 53.6%. Let's take another illustration for better understanding. A company buys equipment at a cost of $10,000. It decides to depreciate the asset at the cost of 20% per annum, based on the reducing balance method, RBM. Let's calculate the amount of depreciation and WDV for 5 years. Show how equipment will appear in the balance sheet at the end of year 1, 2, and 3. Let's find out the solution. We need to prepare a table where we start from the years, cost. Depreciation equals cost times 20%. WDV equals cost minus depreciation. Accumulated depreciation. For first year, cost $10,000, $2,000, $8,000, $2,000. For second year, cost $8,000, $1,600, $6,400, $3,600. For third year, cost $6,400, $1,280, $5,120, $4,880. For fourth year, cost $5,120, $1,024, $4,996, $5,904. For fifth year, cost $4,996, $821.2, $3,276.8, $6,723.2. Let's see how equipment will appear in balance sheet as under this method. Let's prepare the chart for 2 years. Fixed assets, year 1 and year 2. Equipment, gross block for first year, $10,000, and second year, same as $10,000. Less accumulated depreciation. For first year, $2,000, and second year, $3,600. Net block for first year is $8,000, and second year, $6,400. We also need to consider merits and demerits of reducing balance method. Merits of RBM methods are: A. The charge for depreciation reduces every year, while maintenance cost is likely to rise. Thus, total cost of use of asset will remain more or less constant. B. Valuation of asset, as shown in WDV, is likely to represent its fair value. C. This method reduces the impact of tax on profit during the earlier years of the life of the asset by charging higher amount of depreciation. D. This method is approved by income tax authorities. Demerits of RBM methods are: A. The amount of depreciation keeps on changing each year. B. The value of the asset cannot be reduced to zero, and some balance will always be left at the end of useful life of an asset. Let's make a comparisons between SLM and RBM methods. This table shows basis, straight line method, reducing balance method, depreciation. It remains the same throughout the life of the asset. It goes on decreasing every year. Book value. The book value of the asset can be reduced to zero. The book value of the asset cannot be reduced to zero. Income tax law. This method is not acceptable. This method is acceptable.
Thank you for watching, guys. If you found this video helpful, hit that like button and leave your valuable advice below. And please subscribe to our YouTube channel so you never miss an update, and share it with your friends.